Morning, ladies and gentlemen. So today will be the first video right after a really long period of time that I didn't publish. I was only posting. So not so long ago, I was just trading, analyzing graphs, and I was like thinking what happened? The second part of 2025 and in January in gold. What were the reasons of this phenomena? And I started to analyze. I collected my previous videos, my previous posts, and so basically I came to a decision that I need to make up the cycle of the video devoted to gold. And today, the first video about the technical retrospective, let's call it. There will be also two additional videos devoted to my personal experience and what to do when you got your stop out, when you basically got your margin call, and right after that, how to keep up in your life, how to continue doing what you did before, because it's really important to achieve your goal, to go to your goal. So yeah, we'll be in next video there will be more about psychology, about behavior, about risk management. Will be really interesting. So, but today we will talk about technicals. So let's start with technical perspectives. What did we have? What do we have here? We have the chart of goals dynamics since the beginning of April. And we see these sideways movements since the mid-April till the end of August, basically the consolidation, and the market was accumulating the positions. Right after that, we have the start of really long and really strong bullish trend. And here, the fundamental factors were the following: the renewed momentum from Fed rate cut expectations, market pricing in September-October cuts, a weakening US dollar, and persistent inflation concerns and early signs of tariff and trade policy uncertainty under the new administration. Central banks, for example, Chinese central bank was buying gold really excessively and provided steady support. This period marked acceleration after this summer sideways movement, with gold benefiting from seasonal reacceleration in demand. In October, we had this FOMO buyers, just regular people like you and me, were buying gold like crazy. And you probably remember I was recording the video where I told you guys, don't rush into the trade right now because it looks like there will be a dump, a big dump. And this dump actually happened. We had um, the last bullish impulse, then we had the attempt, but we didn't rewrite the maximums. And from the maximums to the lowest points, we got 11% of decline here, which was really dramatic for some of the depots. After that, we had a little bit of sideways, but still we were in the uptrend because the fundamentals were all the same political uncertainty, the same trade policy, United States trade policy, the same inflation concerns, and etc., etc., etc. The factors didn't fade away, they were all the same. And even by the end of the year, we even rewrote the maximums. But yeah, the last days were bearish. Here we have January. January was really bullish, probably one of the most bullish months for gold in history. We had almost 30% of the upside here. The growth was even more vertical than it used to be in October. The geopolitics was even way worse. You remember the captivity of Nicolas Maduro, the president of Venezuela. Yeah. Additionally, the U.S. institutional instability, the fears of it accelerated. tariff impacts, uh, persistent dollar depreciation. But here, at the end of January, January 29th, 30th, the market the market was shocked by decision that Kevin Warsh will be the next Federal Reserve chairman, and Kevin Warsh is a really controversial figure. He is actually historically he was really hawkish about the rate cuts, and the market was probably thinking, well, screw that, I will take my money and just go away. And we see this fall down. We see this dramatic decline, which was even more than 20%. Why was it so big? Not only because market was going into the cash, also because here we had this uh, vertical growth, and what I think is that many market participants were using leverage here, and they just got destroyed. And that's why. Um, but once again, it didn't break the trend. It tried, of course, it tried, but still, the trend is alive. And although we had basically the first part of February, the major of it, we have this sideways movement, still we are going higher and higher and higher again. But we didn't rewrite the maximums yet. Yeah, here we have this uptrend due to another round of geopolitical instability. All of you remember uh, the talks about Greenland, the talks about Russia-Ukraine conflict, and of course there were some talks about conflict in the Middle East between United States, Israel, and Iran. There were some possibility, and we had this possibility here. And if you think about it logically, probably you were right if you didn't stop here because chaos in the world. What do you expect? The only idea is that we should go into the safe havens like it used to be before, and probably you would be right, but gold went down, and there are several reasons for that. So the reason number one is that it was basically market took the profit. Market participants sold the asset when we had the facts of start of the military operation. Second thing is that the market went into the US dollar, not in the gold. And here you may see how dramatically the DXY grew on Monday and on Tuesday, but right now it looks like we have some downwards correction here. And the third thing is due to the conflict in the Middle East, where we have the oil production, and through the Hormuz Strait, we have the 20% of oil that going through this strait. Uh, this raised the prices of oil and gas, and of course, the high prices will influence on the market on just basic needs and basic goods. So this will increase the inflation, of course, and here we have the risks of United States will not cut the rate. But if you think that this conflict will have some continuation, it will not end in the nearest future, then gold may become the shelter here. So yeah, basically that's it. Probably the most effective strategy here was just to buy at its lowest point, like the entire trade, just to buy it and push your top loss close to the trend line here. Of course, it's not so effective by means of the maximum of profitability, but here at least you will limit your losses, or even you will take some profit. Because yeah, the strategy of buy and hold, it is the strategy of 2015 2005 and probably 2006 year. What I expect personally from gold, I don't think it's done yet. I had such thoughts before, especially after the end of January was really dramatic. Um, it's really dramatic dump, and I thought that, well, 4,000 somewhere near, but no, we're still in the bullish trend. Trend is your friend. Don't forget about it. Manage your risk management. May profit be with you guys. Next time, we will talk about psychology, about personal experience, and how to keep up yourself after you got stopped out or you got the margin call or just things went wrong because it's really important. Yeah, thank you for watching this. I hope this video was really useful for you guys. Bye.